Champion International was a publicly traded multinational diversified U.S. company. It is the record sales and earnings of the first quarter in 1992 of the company exceeds any first quarter in Champion's history. This growth represents both a continuation of the basic demand for Champion products and Champion's program of diversification through acquisition. The company's three principal operating sectors, consumer products, paper products, and industrial systems, all showed growth throughout the quarter. The growth is an classic growth through diversification, and due to the quarter's successful growth is due to its global search for compatible and reinforcing acquisitions. And the company's consolidated net income is for the 3-month period ending March 31st, 1992, was equal to 55 cents a share. And the stock's price had risen rapidly, and in 1993, as a result, Champion was known as a growth stock. Securities and Exchange Commission requires publicly traded companies to disclose information on an ongoing basis. Therefore, the company should prepare a financial statement comply with the Form 10Q, and at the same time, make their price-earning ratio as high as possible to attract their investors. Before adjustment, the company price-earning ratios represents 40 cents per share. Under the conservative accounting, the Champion International Company caught advising accelerated foreign dividend receipts and picked up an export incentive tax saving for the first time. Deferred maintenance recognized income on planned 1993 shipments advanced to 1992 deliveries. So the next year high and excellent performance is like rock Peter to pay Paul. Now they have to pay the price. Concerning the deferred maintenance, first we have to define what is the deferred maintenance. The accounting standard setter for the U.S. government, in its Statement of Federal Financing Accounting Standard 14, defined deferred maintenance to also include deferred repairs in this way. Deferred maintenance and repairs are maintenance and repair activities that were not performed when they should have been or when scheduled to be, and which therefore are put off or delayed for a future period. Maintenance and repairs are activities directed toward keeping fixed assets in an acceptable condition. Activities include preventive maintenance, replacement of parts, systems or components, and other activities need to preserve or maintain the assets. Maintenance and repairs are distinguished from capital improvements, exclude activities directed towards extending the capacity of an asset or otherwise upgrading it to serve needs different from or significantly greater than its current use. Therefore, the company reported earnings for this quarter that are substantially below last year's first quarter results. So we think that the company should report the deferred maintenance at 2% because they should defer maintenance quarterly. as of the heavy maintenance. In our opinion, we think that the heavy maintenance is 2 cents per share because the company mentioned that the maintenance in the first quarter is always and usually higher than other seasons. So we think that the heavy maintenance is 2 cents. Concerning the export exempting corporation tax, the company mentioned that this is their Southeast Asian subsidiaries' peak export periods, and it is over 1/3 of the year's projected EIC tax saving of 8 cents. So we think that the EIC cents is 3 cents. The company mentioned that the schedule 8 cents of the EIC tax in 1 year and spread every 2 cents in every season, but we think that because the first season is the peak export period, so we think that the first season should report 2 cents plus 1 cent because of the peak period. As to the relocation of Silver Spring, in our opinion, we think that the company should report 3 cents. Although the company wants to defer the spring cost, we think that they cannot defer it at all. They cannot defer it anymore, so they should report 3 cents a share. Concerning the Brazilian dividends, first, we have to define that whether the champion company control or have influence on the Brazilian company. If the champion company control the Brazilian company, the dividend should refer to the minus of the investment cost. In other hand, if the Brazilian company if the champion company only have under 20% share of the Brazilian company, so it just have the influence on the company. So as a result, if the Brazilian company pay dividends, it should report the dividends as dividend income, so they can in this way they should report 4 cents per share. As to the foreign dividends, the company projects that it will have 10 cents per share of foreign dividends, but however, in our opinion, we think that the company cannot report 10 cents because it has not actually happened. If the dividends really happens and the dividends was paid, they may report 10 cents per share, but in this case, the dividends haven't happened, so we think that the foreign dividends should depend on what amount the subsidiaries paid.
Now we are going to consider the Italian subsidiary write-off. The company invested in the Italian company last year, and the Italian company is still delivering operating profits, but its inventory and receivables turn out to be overstated. Their internal auditors will find that some of the equipment were lost and not on the book, and also there are a lot of inventories were damaged and their receivable pay days were too low. As a result, we should write off it. And in this paper, we have the document that all these amounts are about 6 cents. As a result, we write off the amount to 6 cents. Then we are going to consider the lawsuit between the Italian court against the Grandini company, and this amount is about the write-off amount. However, their chance of collecting is very slim, and they should recall this amount when they finish the lawsuit. That is to say, when they win the lawsuit in the future, they could record it. The next one is the major advertising program they had in March. They figured out that they spent about 2 cents a share above their average monthly budget. The principal cause was the unusual TV show and related radio and paper advertising. All of this was charged too much. As a result, we should record it just in March. And the Congress later this summer is going to adopt an investment tax credit retroactive to January 1st this year. And they should take into account it in the first quarter. And we should match cost to revenue. That is, the EIC, we just figure it out. We should record the EIC tax deferral to 3 cents. And we should not over record the investment tax credit. We record 3 cents and not to exceed the EIC. The company have picked up in the first quarter 1/3 of the third quarter advertising cost related to this year's special fall campaign, and the campaign is, in addition to their novel advertising cost, is going to cost about 6 cents per share above their regular advertising cost, which are run fairly evenly throughout the year, and that it is a kind of period expense. As a result, we should not record any percent in this fall campaign. The fall advertising cost is 0 cents. Due to the change in the dollar relative to many overseas currencies, the company had an exchange gain of 4 cents per share on their hedging of anticipated foreign currency dominated transaction. That didn't include this in the first quarter result. However, we think that they should record and recognize 4 cents to this item, because the foreign exchange gain cannot be offset from the first quarter and to the other quarters. The offsetting is about the hedged item, and the hedged item is not about the time. As a result, when it happens, we should record it. The last one is about the hedging. And due to the change in the dollar relative to many overseas currencies, the company had an exchange gain of 4 cents per share on their hedging of anticipated 90 and 93 foreign currency denominated transactions. That didn't include the item in their first quarter result. However, we think that they should record it in the quarter, because the hedged item and the hedged item is offsetting. However, we cannot offsetting the first quarter to the other quarters. That is to say, we are not offsetting the time. However, we are offsetting the item. As a result, when the time comes, we should record it. From these items, we made the conclusion that all of the amounts are 47 cents, and the company made nearly 47 cents for the first quarter.